What's up, guys? Today we have another special guest. So we're bringing in Chris. He's an ASFX member from South Africa. He's been trading for about 2 years, and he shares a lot of value. Tom and James ask him some great questions. We're going to talk about tracking your trades, improving month by month as a trader, what laying a successful foundation for a trading career is. Like, we cover a ton of value in this episode. So sit back and enjoy. What's up, traders? Welcome back. So today we've got another important guest. Chris is joining us, another South African trader, brother with James here. We're going to talk all about his experience with ASFX, but more importantly, I want to talk to Chris about tracking his trades, where he really finds a lot of strength in the tracking, what he loves about it, maybe some tips for some new guys. I'm sure, Chris, you'll be able to share some things there. And also, I really liked your answer, Chris, to the what was your aha moments so far in your trading career. So I'm really looking forward to this, bro, because I think there's a lot of value that you can share. I mean, you've only been trading for about 2 years. Is that right, Chris?
Yeah. So yeah, almost 3 years now. So
almost 2 years.
3 years, yeah.
Yeah, so we'll call it 2 years. And before that, you thought trading was very risky. Is that correct?
Yeah. So I've always been interested in like investing and like wealth creation, but I saw trading as a very risky approach. So I was kind of scared of the whole trading thing because I thought I was going to lose all my money. But I was always interested in unit trusts and ETFs and stuff like that. And then in February 2020, I watched a YouTube video, I can't even remember who did it, about some of the first funding companies or the prop firms. And I realized I have the opportunity of making money while risking someone else's money, not risking mine. So I started trading with the express goal of getting funded. That was the goal from the beginning, is to obtain someone else's money to start trading with.
That's a really good way to go at it. And because you're a part of the Black Shirt Club, you see how many guys and almost the whole group, if not everybody in the group, is trying to get funded. And I think like from my perspective, I literally talked to a new guy yesterday on like one of the sales calls I did. And he was like, you were like speaking to me in a video, Austin. He's like, you were like talking to me. And I said, well, what did I say? And he was like, you're stupid if you're a new trader first 2 years and you don't try to get funded. And he's like, it's like you were talking to me, bro. And it's like, well, maybe I was for that day, maybe you needed to hear it, but it just offers everybody such a great opportunity. I wish that I would have taken it more seriously sooner. I think I would have been funded longer, like James, but also even before that, I was kind of like negative towards it. But with open-mindedness comes more success and more prosperity. So that's good for all of us. With the funded process being the reason you got into trading and you were like, let me try to make this happen with someone else's money. Where did you find ASFX in that process?
Yeah, so initially I got sort of like caught up in the hype on everybody trading on social media with these huge returns and the 40% months and whatever. And even though it's not realistic, there's always this little voice inside your head that's saying, but what if it is actually possible? So I got stuck on that trend for almost 2 years, following like a number of different communities, a number of different mentors, none of them actually really trading, I later realized. So it was only after about 2 years, it was March 2022, yes, that I joined ASFX. So I was almost at the point of giving up. I see Tom is laughing at something now. He's probably going to tell me why now.
No.
Yeah, so it was only after like 2 years that I found ASFX, but it's only once I realized that these 40% months are probably pretty unrealistic. And so I've been following you guys on Instagram for a while before that, but I thought the gains you were posting wasn't enough. I thought like the 1%, 2% months isn't going to cut it. That's not going to get me funded. So I was hopping from one strategy to another, trying to get that 10%, which never happened. And eventually I ended up with you guys. Yeah.
So wait, you have to give more context to that. So you weren't satisfied with my truthful posting about my 1%, 0.5% gains, but then you ended up coming around. So what made you come around?
I think I finally gave up on the 10% months and the 12% months. And I
let go of expectations.
Yeah. And that's the biggest thing. That was my biggest struggle in my trading career. I told you that earlier as well. Managing expectations for me was a big issue.
Yeah.
And that's what caused me to jump from strategy to strategy. I think you have this like expectation, and the funding companies fuel that expectation. But I think you have that expectation of making 10% every month. and it's not going to happen. It's not realistic. And then the moment you trade a strategy and you don't hit that 10%, I would quit that strategy and jump to the next one, because I think this one isn't going to work.
Right.
I think that's one of the biggest reasons that most people quit before they get a chance to succeed in this.
Yeah.
So with that in mind, what was it that lowered them expectations and grounded them a bit more for you to bring you back to normality? And
don't say
2% month?
Don't say James was giving you a good lick, cursing you out, spanking you out. It wasn't that. It had to be something else.
Definitely not. I think initially I gave up on my goal of getting funded. That was a big thing. I think after 2 years of trading or trying to trade, I saw that this could work, and it's not as risky as I initially thought it was, but I'm probably not going to hit that 10% target. And by that stage, it was mainly FTMO back then, and they were requiring 10% in 30 days, although the other firms didn't exist by then. But I sort of gave up on that dream or that plan of getting funded, and rather decided that I'm just going to trade my own capital. And the moment I decided that, I didn't have that time pressure or that target pressure of, now I have to make 10% in a month. So I could take it slower, and I could be satisfied with smaller gains because I don't have that target hanging over my head. Yeah, so that was the biggest shift for me.
And I know you said that you're a fan of wealth creation and you've got other investments and things like that. You'd take 10 to 20% a year on some of them other investments.
Yeah.
So your expectations of investing was there already, but trading was there at 10% a month.
Yeah. Yeah, so it's completely unrealistic. But it's like people buying lotto tickets. You're not going to win, but you still buy the ticket. You still have that little hope, or that small little chance.
That's true.
But you're not going to win, but you still go for it.
That's true. That's very, very true.
It took me longer than most to realize it's not going to work.
Well, there is a common characteristic amongst successful traders is that they are stubborn in some ways, where they have to learn lessons themselves. You could tell them what to do. You could stick the fork in the horse's mouth, but that doesn't mean it's going to chew. We, as I would say, all of us here, successful traders, we've all had to touch that stove a couple of times before we finally said, okay, I'm enough with that. But it's interesting. Everybody's stove, metaphorical stove, is different. The thing that you struggled with was expectations. I feel like that was something that I actually didn't really struggle with at all, but I had other issues like over trading and moving my stop loss and other things that I don't ever see you do. So everybody's issues are different slightly in the same bucket of trading mistakes. But I think we all have to go through that process of like self-learning to an extent before we really say, okay, I'm going to make a change. You have to be, I think there's many motivational speakers that talk all the time about like, you can never make true change until there's an emotional anchor to drive that change. You have to, in this case, be hurting enough, be frustrated enough to finally say, this frustration is why I'm never going to do this again, that kind of thing, So when you came into ASFX, Chris, what was the first initial thoughts after 2 years of trading pretty unsuccessfully to then see the course? What was the first initial thought? Do you remember?
Not so much in the course itself, but I think in the transparency of you guys actually posting all your trades. And I was part of a number of communities prior to joining ASFX, and that never happens.
Yeah.
Like nobody is so transparent saying, this is the trades I take, this is the losses, this is the wins, being completely honest, completely open about it. And I joined like, I think maybe 2 or 3 weeks after you lost one of your funded accounts because you kept a trade open over the weekend and it gapped up or something.
Yep.
And you posted that. So I think you even posted on the weekend, you said, I'm about to lose this account.
Yep.
And on the Monday you posted, I lost my account. And that was so open and so honest, and you never see that in any of the other trading communities. All of those guys only post their wins. They only post they're making X percentage a month. So the biggest thing that stood out to me was the transparency in ASFX.
No, that's good to know, because I think that's something that we all, the three of us, pride ourselves on. I think another part of it that probably attracted you a lot was the detailed tracking, right? And that's probably something we should get into discussing as well. It's like once you started to see, especially I would give Tom a lot of credit for that. Like Tom has always done, remember he had a blog before he was a part of the ASFX team. Like Tom has always done a really good job at tracking his trades. So when did, you come into ASFX, you see the transparency, you start to buy into it. And then when you buy into it, you can implement it better naturally. Yeah. But then when did it really start to make some big strides forward? Was that once you started tracking everything?
Yeah, I think probably only after I joined the BSC.
Okay.
But it's that whole community, or that whole accountability behind tracking everything. Like I've always, even with my investments and stuff, I have like a number of spreadsheets that tracks everything. And if I increase this investment to this is going to happen over 20 years or 30 years or 40 years or whatever. Right. So the tracking has always been a big thing for me. And when I saw in the BSC that that's a big part of what you guys are doing there, or what we are doing there now, that's when I joined the BSC. And the moment I joined the BSC, I could see my consistency improve immediately. And I'm not even trading the same setup I was before I joined the BSC. But that all comes from trading, from the tracking. And that all comes from doing my markups, seeing what I'm good at, seeing what I'm not good at, and focusing in and zooming in on the stuff that you are good at and cutting off the rest.
It's a really good point. You are definitely I think of all of our sessions that we have on in the morning at London, and you are definitely the contrarian of the group. And we all ask, what are you watching today? What you're looking at? There's that comrade. We're like, James is like, I'm going to buy GCAD. I'm going to buy GCAD. Christian's just like, no, I'm selling GCAD today. I'm doing completely the opposite to all of you. But that's evolved from, like you say, that you are confident and knowing your edge based on your stats through the tracking that you have done, which I find really, really, really interesting. Do you think that is something that you're likely to carry on, and how are you going to improve that into 2023?
So in terms of the tracking, I don't think that's something that could ever stop. I think the moment you start with the tracking and stuff, and you reach a point where you're comfortable with it, and you stop doing the tracking, you stop trying to improve, the markets are going to change. It's not going to stay exactly the same. So if you don't keep track of what you're doing, and you don't keep track of how your trades are performing, you're going to get left behind. So that's not something that I'll ever stop doing. At the moment, I'm only trading one setup, but I am looking at increasing that during the course of 2023 to add another trade entry maybe. But for the moment, I'm more focused on improving the one that I am actually trading now. But definitely, the tracking will never stop. I'll keep doing that. I think that's probably the biggest part of trading.
Maybe. I think, Chris, in 10 years, you're going to be answering that question differently. You know,
why?
Because if you look at some of the successful traders like Tom Canfield, or who were we were just speaking to somebody, Mike Lamoth, and he was talking about William O'Neill, and William O'Neill taught Ryan, what's that guy's name? Something Matt Ryan, something like that. Not Jack Ryan on the Netflix show. It's he runs the event with Mark Manaviri. He won U.S. Investing Championship, whatever. His last name is Ryan. He doesn't journal any of his trades at all. You remember what I'm talking about, Tom and James, from the episode earlier this week? Yeah. So I think there's a lot of successful traders that grow into this person of, no, they are not tracking as much as they were, but I can totally understand why in the short term you would, and all of us kind of feed off of the tracking. And I mean, you wrote it, but I don't know who said it. Measuring is knowing. Was that something that you came into trading knowing, or has that been an aha moment that you've discovered during your trading?
It's something that I knew before trading. It's an Afrikaans saying, it's om te meet is te weet. It's measuring is knowing. To measure something is to know exactly what it's about. So I only implemented it in my trading, or realized that it's applicable to trading a bit later on. Once I started with all the tracking, and once I started seeing exactly what I'm doing right and what I'm doing wrong, that's sort of like the two merged for me. But it's a very important part of my trading at the moment. I think I agree with what you're saying about maybe in 10 years' time, the tracking won't be as important. But I think coming from my personality, it's something I'll probably keep on doing.
Yeah, I could totally see that.
So it's something I've always been doing, just in different fields of life. So it's probably something I'm going to keep doing throughout. And I think it's a huge help for me.
So now, before we go past that on the BSC stuff and we go down into the tracking, I have to ask, when you think back to initial days at ASFX, before the Black Shirt Club, before you joined the mentorship group, and you were just a regular VIP member, is there anything you would change, or like that you could give us advice to doing better in the group chat, in the course content? Is there anything that you could see improvements in?
No, from your side, not so much.
Okay.
I think advice to newer members of ASFX is to get involved as soon as possible and to ask as many questions as they can.
Yes.
I made the mistake of joining ASFX and not asking questions, not like getting involved. And I wasted probably a month or two just trying to gather stuff from other people's questions and stuff.
Right.
And there's no use. If you're wondering about something, chances are very good that someone else is wondering about it as well.
Right.
So
And chances are it's been answered already and other people
Yeah.
can help you. Right.
Exactly. So if you're wondering about something, just ask it. That's the
Great.
biggest thing. I think if you look at the ASFX VIP group now, there's probably like 1,500 members in there, but there's maybe 20, 30 who are active.
Right.
So what are the rest doing?
Right.
I don't know. You're never going to improve if you're just lurking in the shadows.
Well, they're lurking. Exactly, bro.
Yeah.
I mean, there's a lot of people that are, I talk to them. I get on sales calls with people for the Black Shirt Club and they're like, yeah, I've been in the Discord. I say, I never seen you talk. Oh, well, my username was XYZ42. And then they popped in occasionally, or they never spoke at all, but they watch. And now all of a sudden they realize what you realize. Well, I can actually get feedback here. I can actually get answers here. Oh, imagine that, you know? And I think like you mentioned this already. I know James can speak on this. The social media distractions and the business that people do in our space makes it very easy to stand out like in a good light when you're us and you handle yourselves professionally. There's many businesses in our space that literally sell a product and then have no customer service to back it up. Know where to ask questions and get feedback. That's going to lead you to, you know, a business that doesn't last very long. Whereas with us, once you're in, it's very easy to get a hold of all of us. We're all very easily reachable. And like you said, it's often the people that just are lurking. They're not putting themselves out there. And, you know, maybe it's just part of their journey of self-discovery of saying, you know what, I do need to put myself out there. I do need to ask for accountability. I do need to be willing to be wrong. Half the time I feel like people don't want to ask questions because they don't want to be called an idiot or they don't want to be labeled as wrong. And that's like, like you said, it's just going to hold you back. You know, were there any other situations in your journey so far where you realized I was holding myself back by doing this and that you could speak on that might help someone new?
But just going back to what we said in the beginning, like my very first trading community that I joined, and I'm not going to name names now, but if I just stuck with them, I probably would have been a lot further along than I am now. And they were very similar to ASFX, but the gains they were posting, I thought wasn't enough. So I thought these 2%, 3% months wasn't good enough. So maybe for new traders, just lower your expectations a bit. Firstly, stop and reevaluate and think if this is really what you want to do, because it's not going to happen in a month. It's not going to happen in 2 months. It's probably not going to happen in a year. So honestly, go and sit with yourself and decide if this is really what you want to do. And then go and find someone like Austin and James and Tom, all three very good coaches. Go and find someone like them who's already done it and follow their example. Ask them as many questions as you can possibly ask them. Don't sit there and lurk and just stay quiet. Ask the questions. That's the biggest thing.
Yeah.
Chris, I just wanted to ask now. So I know we spoke about prop firms or funding companies in the beginning of the video. We're filming this now on the 5th of Jan. I was listening to a Tom Canfield episode. He said, want less, expect less, experience more. And I think that's like such a good saying with what we've been speaking about now. But when it comes to your goals for 2023, are you still looking to get funded? Is that still, because I know you said you came into trading with that as your main goal, to use other people's capital to leverage yourself. Is that still your goal for 2023 and the future?
Yeah, so that's probably my main goal for 2023. I think I took the whole of 2022 to establish a foundation, and I think I'm ready now to take that bigger. So I think I'm in a position where I can try these challenges again, and again, back to the statistical tracking and whatever, I'm working on a way to optimize my position sizing for taking the challenges based on my stats. But now I have enough data to do that. Whereas in the past, I sort of like jumped into it blindly and I attempted these challenges and failed and got free retries and whatever, but it's mentally very taxing. So I stopped with that, and I took the year to just figure out where I am, what am I going to do, and I think I'm ready to go forward with that now. But yes, absolutely, that's the number one goal for 2023.
And then only trading that one setup. So what Chris trades is the D2 into A2. It's a trading signal that Austin and Tom developed, the A2 signal. Are you only going to be looking to trade that signal for the duration of the year?
Yes. So at the moment, I'm only trading that. I am doing other markups. So I am gathering data for other entries, other trades, but for my live trading and for the challenges, I'll only be trading that setup. Yeah.
Sure.
I like that.
I'm comfortable with that.
Yeah. No, and I think that's a big part of it. So you said a couple of times there, Chris, like you spent the last year, 2022, laying the foundation. Can you talk a little bit about how you did that and what that exactly means? Because of course it makes a lot of sense. Like, oh, I took the whole year to work out some fine-tuned details. It makes sense. But what exactly? Because I'm sure there's people listening that are like, hey, if I could just take a year and figure out my foundation, I would be great, you know?
Yeah. I think that firstly, the mistake a lot of people are making with trading is they need it to happen now. So they need to, or they want to start making now. And the moment you remove that from it has to happen within the next 2 months or 3 months, the moment you take that away, you get some clarity and you get to see where you are and where you're going a lot better. So in the last year, so I'm saying I took the year, is initially January, February 2022, I completely quit trading. I was like, I'm done with this. It's finished. It's not going to work, whatever. Then the beginning of March, I thought, okay, maybe this can work. I probably won't get funded though, but I'll trade my own capital. It's fine. I can do 2%, 3% months, because at that stage I was doing 2%, 3% months. So I thought, okay, that's fine. So I started with that. Then I joined ASFX because of your guys' tracking and stuff that you posted on Instagram. I saw the TIP that you were working on. So that was kind of intriguing to me. So I joined ASFX, started learning at that stage, it was only the A1, the D1, and the D2. And then I started on a demo account trading all three of those things. And I think that's important to, once you've got the knowledge of the strategy or how it works, just start trading it. These strategies they've already been back tested. We know they work. There's lots of people trading them profitably. So you need to start trading them and see which one of those three, well, now it's four, but which one of those four gels with you the best. And then I would cut out all the rest of them and focus on one. Until you've got that one figured out as well as you can, and then you start trading that. And that's what happened with me. The moment I joined the BSC as well, I went through that process, and then I joined the BSC, and I realized that the one I chose, even that one wasn't the proper one for me. So I chose another one. And then I forgot everything else, and I've just let it go, and I'm super zoomed in on that one setup, and that's all I see. That's all I do. And I think that laser-like focus on the one setup that you're trading, it's like it increases your growth exponentially. Because with divided attention, you're never going to get to a stage where you're super confident in one setup. And I think that's very important. If you listen to all the great traders, all the biggest guys, most of them only trade one or two setups. They don't have like 20 different trades or stuff that they enter on. The really great guys, those market wizards and stuff, only trade one or two basic setups. So that really is enough. And I think we're making a mistake to try and trade too many entries.
Yeah, that's very well said. All of that, like, I hope everybody rewatches that 45 seconds. That was very well said, because it walked through your entire process of what the learning curve over the last year has been. But what's very interesting, as you were saying that, it got me thinking like, wow, in a year, you've made a lot of growth, from January to being about to quit to now, like at the point where you're more confident than you've ever been. So in 1 year, you can make a lot of progress. But what I think it says even more is that this next year, because you're now locked in, that word focus, you mentioned it 7 times there, that word focus is so important that I think you'll see exponential growth in 2023. Yeah. So what are you doing outside of the chart work and the tracking to keep your mental acumen focused? Like, how are you staying mentally sharp? I'm sure you're not smoking cigarettes and eating junk food all day. You're feeding the machine as good as you can, right? But what else are you doing?
So, well, Tom is going to laugh at me now because I haven't been running in the last month or so.
You guys need to race.
Yeah, he'll win. He's got very long legs. I saw that from the London.
He does, bro. When I stood next to Tom, my head was at like Tom's dick. It was embarrassing.
So I run and I'm entered for a 100-mile running foot race in September next year. So I need to get training again.
100-mile race.
Yeah. I did a marathon in November and I took a couple of weeks off after that.
Dude, you're the South African Cameron Haynes, bro.
Mm-hmm. No. There's I would wish to be, but there's lots of South African runners here. And the 100-mile racing scene is a big thing around here.
Yeah.
So I'm training for that. Well, okay. I'm supposed to be training for that.
Okay, good. Is there anything else that you do? Like, are you a big reader? Are you a big podcast listener? Like, what are you doing to stay mentally sharp other than that?
yeah, so I read quite a lot, and then I listen to podcasts mostly. But yeah, other than that, between trading, I spend a lot of time trading, spend a lot of time running, spend a lot of time with my kid. So between that, time is pretty short. So I try to read at night and listen to podcasts while I'm driving and stuff. But yeah, life's busy.
Yep, it definitely is. And you try to be very selective with what you consume, not getting distracted by the bullshit on social media or whatever it may be, right? So now I'm sure you're following very few other traders and things like that, right?
Yeah, I'm not very active on social media at all.
Yeah.
So I've cut down the people that I follow because, like I said, I struggled with managing my expectations.
Yeah.
So if you continuously fed all this BS, that's what you're going to come to expect. So I've cut all of that off, and I'm very selective with the people I follow. Yeah.
No, that makes a lot of
sense. Chris is a pastor, ex-pastor. You can't tempt him into swearing, Austin.
Yeah, you won't.
But I wanted to ask on that topic, Chris, since you are like a kind of a contrarian in your ideas, this goes with how to block out the noise. Like, let's say I'm looking to sell GCAD on a specific day. I know what you're looking at, and I definitely agree with some of the days that because I know what you're looking at, because Chris and I work quite closely in the BSC. But how do you block out the noise when Colin, for example, your good mate Colin, how would you say if he comes and says he's looking to sell GCAD and you're looking to buy it, how do you block out that different ideology?
This is going to sound very arrogant when I say this, but from a very young age, I just had the standard default setting that everybody else is wrong.
I love it, bro. It's such a good approach. I not to sound repetitive, but we just talked about this with Mike, skepticism versus cynicism, right? So you have to find the boundary between the two. That's the sweet spot where you question things. You can be convinced, but you need science. Like you said, you need numbers, you need data, and then you'll.
Yeah. When I was younger, I would just argue with people for the sake of arguing.
Right.
And tell them they're wrong. Once I've grown a bit older and more controlled in my approach or whatever, I think they're wrong.
Right.
And then I would go and prove it to myself that they are wrong. Yeah. So, and that's the important part. You need to gather the stats and gather the data. Don't just come with an opinion without backing.
Right.
So quite often I think people are wrong, but I won't say anything until I've proven to myself that they were actually wrong. Then I might tell them if they ask.
And you might not sometimes. And then sometimes you might not. It's not even worth the energy, right?
Yeah, exactly.
Yeah. So, Chris, you mentioned again a couple of times tracking and that being such a big thing. We talked about focus too. In your aha moments, as far as like your trading career, expectations and dropping them was a big part of that. You said here when we talked about this, the only trading that matters is my trading. So in that confidence, can you talk about like knowing your strategy and what factor that plays into you being confident? Because it's one thing to just be like, I'm going to make $1 million. I'm going to be a millionaire. I know I'm going to figure it out. Boom, boom, boom. But you actually, I think, are rooting that statement in fact. Like you just said, you want to be able to prove it. So can you speak on like what the strategy and knowing the strategy does for your confidence?
I think it goes both ways, because I started the strategy that I'm trading now. I started observing a specific pattern. So I started with marking that up, got a bunch of markups with that before I started trading. Then I started trading it, gathering all the relevant stats for that. Then I realized, okay, I'm doing better with this, and James actually helped me realizing this. I'm doing better with this than with all the other entries. So I might as well cut them out and completely focus just on the one. So that confidence is grown from experience. But it's a loop. It's a perpetual loop, because as you gain more confidence in it, you focus more on that specific setup. You gather more data. With the more data, you become more confident in the setup. So it grows and grows and grows and grows. And I've gotten to the point where I'm gathering stats for stuff that nobody else is looking at. I'm gathering what's happening when this happens, or what's happening, how far does it go before it comes back and gets stopped out at an EMA? How far does it go before it comes back and it gets stopped out if I use a fractal trailing stop? So I'm trying to improve that edge to such an extent that it literally can't be improved anymore. Then I'll go on and go look for another setup.
Constant optimization.
Yeah. So I want to get absolutely the most return out of this one setup that I possibly can before I go on to the next one.
Right. Do you think is it possible to optimize something perfectly to where it doesn't need any more optimization?
No, probably not.
Right, because you can always add something. You could always tweak it. Right.
Yeah, that's why I said the tracking will always continue, because there's always improvement. Yeah. And as the market changes, your approach is going to change a little bit, because the 100%. Market isn't a static thing. It doesn't stay the same all throughout the year or for every year. So you need to be able to adapt with the market. And the only way you're probably going to do that is if you know your stats, know your numbers.
Yeah. I think even like different trading strategies, different styles will work different in different markets. Like you've experienced where like sometimes when you talk to swing traders, if we're in a strong bull run, everybody's a swing trader and they're all making money. You can't go wrong because everything's going up. But when you go through different economic cycles, like we're going through right now with markets not being in a strong bull market, Fed fighting the market, all that stuff, like there's these other factors that you have to be aware of and how they can impact the strategy. So if you're not constantly tweaking and playing with it, you can actually get left behind, which I think is it's a big concern for some people. They're like, oh, no strategy works all the time, so I'm not even going to bother learning. Well, that's not the right approach either, right? You have to be able to learn, tweak. And this goes into Tom's Kaizen mindset, right, Tom? Like that's basically what it is.
Just continuous improvement. Right. And yeah, me and Christian speak about this an awful lot in the BSC and during the London chat, and we spoke about it again today, is that it is always going to be there. And like you've mentioned it, the market changes from this year to the next, but it's easier to adapt a strategy that you've already got than to go and completely find a new one that's never been tested. You've got to generate an idea. You've got to back test it for 10 years. You then find out that the first iteration fails. So you tweak something that fails. That's not good. You've got a strategy that you know has edge. You just then need to adapt and tweak it. Maybe you need to change the time frame slightly. Maybe you need to change your management rules. Maybe if you collect your data, you found what worked in 2019, but doesn't work in 2020. But what happens in 2024 may be the same as 2019. You've already got that data there. You don't need to go and create something new. Right. And that was a really, really interesting conversation that I think we had. And I think that's where we're going to see exponential growth from Christian during this year, because he is, like he says, looking at things that nobody else is looking at. Like, how many different variations of trade management? How many times do we look at trade management? How can I optimize how I exit my trades? You've got how many on your spreadsheet that you're looking at the minute?
When I'm done or now?
Well, now at the minute, I think you've got 5 figures, right?
Yeah. So at the moment, I'm at 3,200, 3,300. But once I've done everything I want to do, it'll be close to 15,200.
I mean, I can't even count that out.
We know, bro. We know. It's okay. But I think that's the kind of, like, just to compare it, Tom, when everybody was like, how many trades did you backtest the A2 over? And we told them over 20,000 trades at the seminar. They were like, what? 20,000? I'm like, well, yeah, I mean, think about what you need when you talk about, like, I really want to know what the data says. Is 100 really going to do it? You know what I mean? So I think it makes perfect sense, Chris. The thing that you made me think about, Tom, as you were speaking there, I'm curious from Chris's perspective, how would you define your relationship with risk, Chris? If you had to do it in like 5 words or less, how would you describe it? Very short.
I'm very risk averse.
Very risk averse. So very conservative. So it leads me to the question that Tom got me thinking of. How do you not cross the line into I'm afraid to lose versus I'm risk adverse and I'm being cautious with my risk?
So not only am I risk averse, I hate losing as well.
So it's tricky, right? That line is thin. Yeah.
Yeah. I don't like losing.
Same.
I don't think anybody likes losing, but no. Like I go on tilt when I lose, right, which is not a good thing. So I just got my strategy to a point where I have a fairly high win rate that I'm comfortable with. And as long as I keep it above probably going to say now around a 60% win rate, above that, it should be okay. At the moment, I'm trading at about a 77% win rate, so it's good for me.
Yep.
And as long as I can keep that win rate up, I'm confident in my system because I've been trading it for a while now, and I have been maintaining that win rate. So I don't mind taking a risk if there's a reasonable expectation of winning. Yeah. And as long as I can keep my win rate up, there's a reasonable expectation of winning.
So with the data that you collect, Would it be fair to say that you'd find it psychologically easier to lower that win rate if it meant that you would be making more in the long term? Or would you still answer that one first?
Yeah. So at the moment, I'd rather maintain my win rate. I think eventually...
How'd I know you were going to say that?
Eventually, I might get to a point where I'm willing to lower my win rate with the expectation of more return. Because if you look at some of the big traders, they don't have like 70% win rates or 85% win rates or whatever. They have lower win rates, but their returns are bigger per trade. So maybe eventually I'll get to that point where I know and I have enough confidence in myself and my system that I'm okay with taking more losses in return for greater returns. But at the moment, I'd rather keep my win rate up just to save myself psychologically.
Where does that self-awareness from knowing yourself to know that you need that higher win rate to trade your strategy well come from? Because I feel that's an awful lot of self-awareness to do that.
I said I'm old. I love it, bro. It's true. It's true.
Yeah.
Listen, I'm getting old. I just had a birthday. I'm telling you, when you get older, you start getting more wise. Chris is the typical old man. He doesn't give a about what anybody says. He doesn't care about what anybody's doing. And his age is giving him wisdom. He's just missing the gray hair.
I do have them. That's why I cut it off. So I think that that self-awareness comes from taking too many losses and then going on tilt and taking more losses because of that. So it's the tracking. You can, like, if you track and see, okay, I've taken 3 losses in a row. Now I've started making stupid mistakes. It's like you can see, okay, A plus B equals C. So I probably need to keep my win rate up to avoid that. And I know you've experienced the same thing because you've said it multiple times in your stream. So it's just experience.
I think you and I are similar, Chris. It's like what I read, like you the multiplier effect of your trading, right? So as soon as like my win rate drops, or if I try and go like drops because of a purpose, like I'm trying to increase my risk to reward, it's like I become a completely different trader. I'd rather trade for a higher win rate and a lower risk to reward ratio because I know that that's my sweet spot. I think that you're the same, and you've realized that comes from the tracking and speaking with us and in the BSC.
But it is a good question.
The thing is that I'm very focused on now, and it is possible to increase your return while maintaining your win rate.
Yeah.
Maybe not by
40%.
Yeah,
right.
Maybe not by 40%.
But you can optimize by 20% or 10%.
You say not by 40% now, but Tom and I were speaking this afternoon.
Yeah.
And simply going from a 1.2 R to a 1.4 R over the course of a year is 40%. If you're risking 0.5% per trade.
Wow.
If you're taking enough trades,
yeah. Right.
So simply going from 1.2 to 1.4 is 40% over the course of a year.
So that's why the optimization is so important, because like even just a small tweak like that in how you're managing the trades could really make a difference on your profit taking. And I think that's probably why Tom would tell you, like, and I said this many times with the A2, like, we're not done with it. There's still, like you're doing, Chris, there's so much optimization that we can do to really make the A2 a great strategy. I think, you know, when you can backtest something initially and come up with a 60% win rate or higher on a 1-to-1 risk reward, it's a great starting point. But nobody's in this for 1-to-1, I think, at 60%. I think we'd all like to win more than that and also increase that even to 1.5, right? Because if you're saying a 0.2% increase in the R over the year is 40%, what's a 0.5% increase in the R, you know?
And especially in 5 years' time or 10 years' time, when you've then got much more capital,
right?
That's a huge amount of the difference between a 100K account and a 10 million pound account. That 40% is astronomical.
It's the difference between a boat and a yacht.
I've got a question though. It might throw a spanner in the works.
All right.
Instead of increasing what do you think here, Chris? Instead of increasing from 1.2 to 1.4, for example, why not increase the risk size of the trade to cover that 40% that you would?
Good question.
Why not do both?
Say again.
Why not do both?
What happened?
Because what Chris, you're saying, if we know that they're going to go farther and we know that they're going to still win at a high rate, why wouldn't you do both?
Exactly.
Right.
So
you have to test both.
Choose one and do that first, but do both. If you can get away with trading larger size,
right,
and you know your win rate is good enough, and you know psychologically you can trade larger size, why not?
Yeah. I think Tom, you spurred this conversation with a great question, but I think what we can see is like everyone does have a different risk profile. That's one of the chapters of the course, right? Understanding how much are you willing to risk per trade and why. That why is very important. One of the guys in the Black Shirt Club right now, Zach, he's risking 1% on all his trades. Now we have to make some tweaks in that. Tom, I know you spoke with Zach a little bit, so you know what I'm talking about. But we can see like his risk tolerance is just much higher than some people. That comes from his belief in money, his belief in trading, his experience so far, how much money he has to trade with, what his goals are. All of that shapes his risk profile. So everybody is slightly different. And I think, Chris, your answer was spot on with, I would rather do what the data tells me, of course, but I would rather keep the higher win rate just to then keep the psychology in a good place so that I don't go off tilt. I think too many times people want to be like robotic and they're like, oh, the data says I should do this and I should lose more trades, but they're going to go further when I win, so I'm going to be okay. But nowhere in there, numbers don't tell you how you're going to feel when you take 6 losses in a row or whatever it is, or how you're going to react when you take those losses. So I think that is the biggest thing. And the only way you know that is with experience. This last year of work that you put in taught you to say like, okay, yes, the data says this, but now how do I use discretion really to make this data work for me, right?
Yeah. So I think it can still be systemized by simply saying, okay, I want to get the highest return, but based on a highest win rate.
Right.
If you know that's important to you, filter your results to get the highest return with a certain win rate.
Right.
So it doesn't have to be like completely sticking your thumb in the air and seeing which way the wind blows and just going with that. It can still be systemized.
Right.
It's just
100%.
based on certain criteria.
100%.
Yeah, I think Mark Tyson said it like quite well. He said everyone's got a plan until you get punched in the mouth. So like, and I think that one thing that helps with that is that is what we've been quite a big topic of today's show, and what Chris I think does really well is the expectation. You can't expect, the less you expect, the less disappointing you're going to be on. When you take 2 losses or 3 losses, 4
and
losses,
then the less emotional you are to then go do something stupid because you didn't expect anything from the first place. Like listen, this is a great ending point. Look at Colin today. Colin goes 3 for 3. I had a call with him yesterday, got him all fired up. I gave him the sauce. Like he was trying to talk with me about some technical shit. And I was just like, Colin, I believe in you. You've got to believe in yourself. You've got to I was telling him how I want his flow, his discretion to come out of him more and him to stop being so robotic because he knows so much. Like he's come so far in his 8 months or so with the Black Shirt Club. He knows enough to be discretionary. So then look, you let him out of the cage. Today he goes 3 for 3 and look at what his response is. He's like, I'm lucky. Right? Because he's saying, and I get what he's saying, right? It's that the outcomes were lucky that they worked in his favor. He's just trying to follow a good process. But like everybody in the chat said, and you said it to him, I think, Chris, you're like, you're not lucky. It's when opportunity and preparation come together to then present you with an opportunity to succeed. Right. Yeah. So I think like that mindset of like, I'm just going to follow a process and try to be systematic and try to approach and win at that process yields the best outcome possible. And especially when the guys are more humble than not, Beautiful. All right. So listen, boys, we're going to wrap it here. Chris, thank you. This was a really good conversation. Tom, James, great questions, boys. I appreciate you guys always giving good feedback, good sounding board. For everybody listening and watching, wherever you're tuning in, we appreciate you. Make sure you subscribe, leave a review, or drop a comment if you haven't already. We appreciate that very much. And if you enjoyed our conversation with Chris, let us know in the comments as well. We'll have to bring him on again for another one as we push forward into a new year, into 2023. So thank you again, everybody. We hope you enjoyed the episode, and we'll see you in the next one.